How do you see the downgrade to Chinese growth impacting or hurting miners?
Yeah, it's a good question. I think what we're seeing at the moment is a shift in some of the macro policies around the world. So when you look back to 2018 and the broad-based consensus of continual tightening of markets there, and obviously that led to concerns around dollar strength, rising US interest rates, and then extending into what that would mean for emerging markets in China. As we've gone into 2019, the perspectives have completely evolved. So we've now got an environment where we're seeing loosening of monetary policy in China, we're seeing fiscal stimulus coming through, and we've also seen expectations around US rates move to one of a kind of a less aggressive phase, and potentially even a loosening as we go into the end of this year and early next year. So I think if anything, the macro has moved from a headwind and it's now becoming a bit of a tailwind.
Are investors seeing it? We're seeing quite a lot of companies under pressure today, a little bit of the actual commodities, and this is on growth concerns. Is it being overdone?
Yeah, I think short-term moves are always very difficult to forecast. What we look for is the medium to long-term perspectives, and we see very strong earnings across the resources space. Margins remain at incredibly healthy levels. And with the companies being so conservative in the way that they're financed, I think the risk of being invested in the equities is actually much lower than it has been in many of the last few years.
Evy, there's a fair amount of gloom about Australia. Of course, the media makes a big fanfare about there hasn't been a recession since they invented Foster's beer. I'm not sure of that. But what I do know is there's a fair amount of gloom of Australia off of China. How gloomy is Australia right now?
Yeah, it's hard to make a kind of a sweeping comment around a country on its own. But when we look at the subcomponents of the Australian economy, one area today that's completely booming is the resources sector. We're seeing fantastic prices of iron ore. The companies will be generating great levels of profitability. There'll be high royalty rates going into the Western Australian government. So if anything, I think the outlook today is one that's way ahead of expectations compared to only a few months ago when commodity prices were thought to be lower.
Well, commodity prices are thought to be lower, and once again, as you say, they're booming. Can you call a super cycle right now? We just had on a number of guests that are a little hesitant to get back to a 2008 boom. Can you get back to the commodity boom that we saw 10, 12 years ago?
Yeah, it's amazing to think that it was that long ago. I think the things that we look at right now are the kind of what's laying itself out for the medium to long term. We're seeing companies structurally underinvesting in capacity because they're being much more disciplined in the way that they allocate their capital. They're not building projects for the sake of volume growth. They're building it for the return for their stakeholders, being their employees, the governments, and also the shareholders. And that is controlling the rate of supply growth. Demand today is actually higher than it has been. So we're now seeing commodity markets that are tight. So you look across the board, inventories are relatively low. Some are extremely low, and that's feeding through into prices. And I think if these two things continue, the restraint in terms of investment, and we see this rate of economic growth in consumption, then we'll have tight markets, which should lead to good prices.
Evy, will that also lead to consolidation?
Yeah, that's the big question. I think we're seeing quite a lot of consolidation in the precious metals area. We saw a large transaction last year, and we're also seeing proposed transactions in 2019. And I think, as we've spoken about before, Francine, where you've seen the precious metals area tends to have shorter life assets, and obviously the need for consolidation is greater. I think if you're sitting on resources that allow you to be in production for decades into the future, the need to consolidate is less.